Hello, Hector. Glad you're here. I'm just waiting on YouTube to start. Hello, everyone. Welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Excuse me, still have a cold. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is positional analysis. And I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spot Gamma Hero to confirm my thesis and for setups for entries and exits. And just to be clear, I will be talking about setups today, and those setups can be taken either with shares, options, or futures. That's up to you, but the basis of my analysis is options, order flow, and hedging flow, and the again, whatever you trade, that's up to you and how you like to trade. And questions and comments are welcome. And I will be watching the Options-Doug chat channel in Discord and then the chat in YouTube as well for your questions and comments. So Grasshopper pointed out, had a great discussion this morning regarding a potential divergence in the S&P 500, and I will talk about that today. So my agenda for today, what I want to talk about, quickly go over news items, wrap up the week, and then talk about just a couple of things coming up next week. And then I'll go through my positional analysis, and then I'm just going to highlight a few setups. And then we'll go to the current market. All right, so first of all, news items to wrap up the week. Consumer sentiment came out at 10 a.m. Eastern Time, and that was right around here. And this is the S&P 500 futures, ES futures, and this is the 10 a.m. data. The consumer sentiment came in lower than expected, I believe. The site that I use for financial news data was down today, but I believe it was lower than expected. And anyway, it appears to the market, whatever it was, the market had a negative reaction to that, and price moved lower pretty sharply. It was already slightly lower, and then it continued lower after that. All right, next week, upcoming items, VIX expiration on Wednesday the 17th, and then monthly options expiration on Friday the 19th. All right, let's talk about positional analysis now, and I will get back to this chart in just a moment. I'm going to start with an S&P 500 SPX chart. So this is SPX, and this is starting with the month of April, beginning of the month of April, when market makers' gamma positions shifted to positive. So SPX has been trading in a pretty tight range since then, from about 40.50 up to 41.86. So a pretty narrow range for SPX since then, since the beginning of April, when market makers' position on the gamma curves shifted to positive. All right, this chart is showing several levels from different sources. First of all, this purple line, dash purple line, is showing the lower and upper edge of the expected move for the week. That's based on the options market, and that is updated once a week. I update that once a week. And then the dash blue line is showing the upper and lower edge of the expected move for the day. And that so far, we'll see in just a minute at a smaller time frame chart, that lower edge of the expected move for the day did hold pretty well today, and it held yesterday as well. And that is for SPX. And then also, this chart is showing key spot gamma levels. These are provided to spot gamma subscribers for a variety of platforms. And again, this is Thinkorswim, showing the put wall at 4,000. That's the strike with the largest net negative gamma that can be expected to act as support. And that is also the absolute gamma strike, the strike with the largest absolute gamma. Here's the volatility trigger at 4110, and that is spot gamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, they have to trade with price to hedge their delta exposure, and we'll see that more closely when we look at the Vanna model in just a couple of minutes. And then above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure. So that tends to subdue volatility in a positive gamma environment and enhance or increase volatility in a negative gamma environment. And then finally, here's the call wall at 4,200. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. All right, so that is SPX in about a 1 month chart. Now let's take a look at just today, SPX for today. So this is showing the levels that are in play for today. First of all, there's the lower edge of the expected move for the day, and this is based on the closing price yesterday as well as the information, the expected range at the close yesterday. And other levels that are in play, here's the volatility trigger, the zero gamma level, and then the SPX 4100 level that was noted as support in the spot gamma AM founders note. All right, let's take a look at the bookmap chart now. So the levels in play, I'm showing 2 columns of levels here. And the first, these are spot gamma cloud nodes provided to spot gamma subscribers, again for a variety of platforms, and these are provided in the form of cloud nodes. And it looks like spot gamma is showing there is a difference between the price of ES and the price of SPX. So these numbers are in terms of SPX numbers converted to an equivalent ES number. It looks like spot gamma was using 13 points today, and I calculated this morning, my ThinkScript was showing it was 13.5 points. So there is my 4100 level right there. And then Razor asked you calculate the lower and upper edge of the expected move for the day, and yes, I do. So what I do is, let's go take a look. I'll show you in just a minute. Let me finish up with this chart, and then I'll show you how I calculate that. It's very easy. All right, so that is these are levels shown on my cloud notes. And again, I calculate a slight difference in the ES to SPX difference than spot gamma, 13.5 points versus 13. All right, so there's the 4100 level, the 0 gamma level, and also the 4110 volatility trigger. And as Razor points out, there's the lower edge of the expected move for the day. And then I'm also showing key SPY levels. So here is the SPY 412 absolute gamma strike. And note that level did act as support briefly this morning and then acted as resistance. Let me just make an adjustment to this chart, make it a little bit easier to see. I'm going to tone down the heat map and bump up the volume dots just a little bit. So there is again the SPY 412 absolute gamma strike acting as support briefly and as resistance. So all of these levels are in play for today. So I have SPY levels, SPX levels, as well as the lower and upper edge of the expected move for the day. And this is for SPX converted to an equivalent ES number. And it was pretty close to the lower and upper edge of the expected move for ES as well. All right, so those are the levels that are in play for the S&P 500. Now let's go answer Razor's question. So this is an option chain for SPX, and this may be difficult to see. What I look at, so we know that SPX has options that expire every day. So right now, this 12 May, that's expiring today, and then at the end of the day today, I will take a look at 15 May, that's the Monday expiration, and look at this number right here. And right now that is showing a range of plus or minus 35.27 points. And there are other ways to calculate this as well, but this is the quick and easy way, just to use this information in an options chain. And I think most options chains should provide this information. So at the close, I'll take the closing price today of SPX and look at this number and add it and subtract it to SPX, the closing price, to get the upper and lower edge of the expected move for the day on Monday. All right, so Hector asks, are you familiar with Ludwig levels? I don't think they are shown on spot gamma. Are those the levels that Scott Pulcini uses? At any rate, I don't even look at them or think about them. I've shown you all the levels that I look at. And the levels that I look at are all based on either round number levels or the options market. And that is what I have found gives me the greatest clarity, and I think these levels are important, and they're, have a factual basis that is well known. I know exactly what these levels are. I can go into spot gamma, and we'll do that in just a minute, and see exactly where these levels are. The gamma levels, spot gamma levels, are based on gamma weighted open interest, and there's no secret there, no secret sauce, no one person generating these levels. These are obvious factual levels. Not to criticize lugwood levels, but this is something that makes sense to me. Okay, let's move on now. So that is the S&P 500, and let's take a look at NASDAQ now. So NASDAQ, the levels that are in play for today. Again, the same thing here. And before I dig into this chart, I'm going to take a look at QQQ. Let me find the right chart. All right, so this is QQQ showing just price and spot gamma levels, and this is a 1 day 1 minute chart showing the levels that are in play for today. And note this 327 and also this combo L5 level acted as resistance this morning, as well as VWAP. Price chopped around the 325 large gamma 2 level for a while, and now is trading below the volatility trigger. And the levels on my NASDAQ chart, first of all, the spot gamma levels provided for NDX, and also these are combo levels combining QQQ and NDX. Now what spot gamma is doing is using the same point difference for NQ minus NDX that they are using for the ES minus SPX, and that's not right. The point difference that I calculated today for the difference between NQ and NDX is about 57 points versus 13.5 for ES minus SPX. So anyway, this is the NASDAQ 100 futures, NQ futures, and here I'm showing levels at the closer to the correct price on my cloud notes. So I've got the combo levels, QQQ levels. There's the 327 that acted as resistance this morning. And here's the lower edge, the expected move. This is for NQ. All right, so the levels in play, and then there's the chop around the 325 level that finally acted as resistance. All right, so that's NASDAQ and S&P 500 levels that are in play. There were a few shifts in levels, and while we're talking about those shifts in levels, I'm going to go take a look at the absolute gamma levels. We'll start with SPX. So for SPX, the only shift in levels was the shift lower and the volatility trigger slightly from 41.15 to 41.10. Otherwise, all levels remain the same. There's the 4,000 put wall and also the absolute gamma strike. What this chart is showing, the orange bars are showing positive gamma or call gamma above the zero line. Those are the orange bars. And the blue bars are showing put gamma or negative gamma below the zero line. And this is market makers' positions at those strikes. So there's the 4,000 absolute gamma strike as well as the put wall. Note the large amount of gamma at the 4,100 level and the 4,150. And there was a question in the spot gamma Discord earlier today about how options are trading, SPX options are trading, and the volume, specifically the volume today. And volume today was the highest at the 4150 call that expires today, and also at the 4100 put that expires today. So that's how options traders were trading. Puts at the 4100 level that expired today, and calls at the 4150 level that expired today. And then here's the 4200 call wall. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. Let's take a look at SPY. I'm going to zoom in on this chart. So for SPY, there was only one minor shift in levels as well. The volatility trigger shifted lower from 413 yesterday to 411 today. Otherwise, 400 remains the put wall, and the key absolute gamma strike remains at 412, and that's pretty obvious, the strike with the largest absolute gamma. And then the call wall remains at 420. So there's the ceiling for SPY and the floor, 400 the floor, 420 the ceiling. I'm going to do a refresh. Going to take a look at NDX just quickly. And really this chart is not, it's different than it has been in the last few days. The call wall and the key gamma, absolute gamma strike are at 12,975, not shown on this chart. And then the volatility trigger for NDX did move higher to 12,890, and that is also not shown on this chart. And then finally, we'll take a look at QQQ. Zoom in a bit here. So for QQQ, there was only one shift, and the put wall shifted lower from 315 yesterday to 310 today. So there's the put wall, the strike with the largest net negative gamma at 310. And then the absolute gamma strike remains at 320. And then there's the call wall, the strike with the largest net positive gamma remains at 330. So there's the ceiling and the floor for QQQ. All right, let's take a look at one other thing on this chart. Let me just do a refresh here. Hello, JEC. Glad you're here. Good to see you in the live session. This is the Vanna model, and this is showing how market makers' delta notional, shown on the vertical axis, changes with changes in price, shown on the horizontal axis. There are two curves on this chart. The first is showing how market makers' delta notional changes with changes in price only. So what this is showing is as price increases, market makers' delta notional will increase, and they will have to sell futures to hedge their delta exposure. And that's typical of a positive gamma environment. And that's what I was talking about before. All right, then on the other hand, if price decreases, market makers' delta notional will increase, and they will have to sell futures as price decreases. That's typical of a negative gamma environment, and that tends to enhance volatility. Now the second curve on this chart, the pink curve, adds implied volatility to the equation. And this is really what you want to look at. So this is showing as price increases, market makers will have less delta notional to hedge. And then on the other hand, if price decreases, they will have more delta notional to hedge. So let's see where SPX is trading right now, and I see it at about 4102, right there where where this vertical line where I'm holding my cursor. So what this is showing is if price increases from that level, market makers can actually buy back short hedges. So that may be a tailwind to price, may help boost price. On the other hand, if price decreases and implied volatility increases, they will have to sell futures to hedge their delta exposure. All right, that's the Vanna model that gives us an idea of how market makers were positioned at the beginning of the day and how they may react with changes in price and changes in implied volatility. All right, let's take a look at one other piece of data. And this is what I want to take a look at is the spot gamma index. And this is for SPX, SPY, NDX, and QQQ. And this number is a proprietary measurement of the total amount of market makers gamma. And what this is showing is for SPX, gamma notional is positive. So positive gamma, market maker trading against price to hedge their delta exposure tends to subdue volatility. And SPY is slightly negative. And then for the NASDAQ, these numbers are slightly positive. All right, so that's how market makers were positioned at the beginning of the day. All right, so let's talk about some setups. So I'm going to highlight setups from the morning for just a couple of minutes, and then we'll take a look at the current market. All right, so first of all, let's take a look at Spot Gamma Hero. And this is for the S&P 500. And this is a combined signal for SPX, SPY, XSP, which is not significant, and ES futures. And notice it is definitely bearish today. So this, I'm looking at this total number here, that's minus 2.5, actually 2.85 billion. So that's a pretty significant number, definitely negative. Traders are taking negative delta positions. What this chart is showing, if you have not seen this before, the white line is price, and this is in terms of SPX, the spot price. And then this is showing options trades for all these instruments, and then the market maker hedging activity. And let's zoom in on this just a little bit. So one thing that Grasshopper saw this morning was what appeared to be a divergence. And he asked about that in Discord, and I told him, well, first of all, take a look at ES futures and confirm with order flow before you take any position, as well as a potential reversal level. But I think the key to this was to separate out puts and calls, and we'll zoom in up. Let's see when that. So this is about when I posted a screenshot. This is about 11:30, and this is showing traders are buying calls, shown by this rising orange line. They're also buying puts, and this chart is showing notional value minus 1.5 billion versus positive 843 million. Put buyers are winning. This notion of value is still negative. And even when we look at the total signal, it's still negative, even though it is rising there. So what appeared to be a potential divergence, if you take a closer look at it, was not, in fact, a divergent signal. And then this also and I posted this as well, appeared to be a divergence as SPX ES approached the lower edge of the expected move for the day, as well as the 4100 level, but that did not play out either. This is definitely a bearish day. All right, so let's go take a look at just take a look at the individual components of this. So SPX, and that's negative minus 845 million. So that's SPX. The next is SPY, minus 109 billion. And then S&P 500 futures, minus 1.17 billion. So this was recently added to the total signal, and you can see here it's adding a significant component to this total. So traders are taking negative delta positions in SPX, SPY, and ES futures. So let's go back to the total signal now. I'm going to zoom in on this chart. Just go to the cash open here. So the cash open is right on the left edge there at 9:30. Let's separate out puts and calls. And again, this is clearly showing that put buyers are winning. And Hector asks, is it possible to scan for hero divergences, or do we have to be looking at the chart? And you have to be looking at the chart. So the hero chart takes some time and experience to interpret. And I'm not looking at this in a vacuum. I'm looking at order flow in Bookmap as well. And sometimes, again, with this S&P 500 especially, there are a lot of ways of looking at this. Looking at the individual components, looking at zero expiration versus all trades. I'm looking at and changing the time frame as well, the rolling window. So this is the default, all trades. So this is all expirations, and also looking at the 1 day rolling window period. And then all I've done to this to change from the default is separate out puts and calls. And you can just look at the lines and clearly see that put buyers are in charge. Price is responding very well to puts. And also just check these numbers. So call buyers, 344 million versus minus 3.5 billion for put buyers. Put buyers are definitely winning. All right, so let's go take a look at ES now. Go back to ES. So, clearly trading from the short side today was the way to go. Just taking any opportunity for a short, any pullback as traders continued to buy. Wrong tool. As options traders continue to buy puts. And just watch the order flow. See all the aggressive sellers there. Aggressive sellers. Aggressive sellers. I'm looking at the pink volume dots. And there was a bit of a head fake here. As price approached the lower edge of the expected move for the day. That dashed blue line. As well as the 4100 level. both potential support levels, and larger traders were coming in with iceberg orders. And note the rising light blue line showing that larger traders were trying to buy this move as price moved lower, and it did not work out. Notice now this large, as price moved up, this large trader comes in with a large iceberg order. Notice the vertical drop and the light blue line there. And JEC points out, yeah, there's a confluence there. So far, the bearish trade is just too strong, but there is a cluster of levels there from the 4100, SPX 4100, lower edge of the expected move that I have at around, I think around 41. 13, something like that. And then also there's the wrong tool. There's the 0 gamma level, the SPY 410 level, as well as the 4110 volatility trigger. And this may definitely slow down price, but so far order flow remains bearish. So this, what appeared to be support here initially at this lower edge of the expected move for the day, what appeared to be support. Notice the shift in order flow, all the green volume dots, market buy orders, aggressive buyers, did not last long. And this large iceberg order executes, 2,785 contracts executed, and then the aggressive sellers start to come in. So this turned out to be just a another pullback in a downtrend. All right, so Hector asks, what is the size of an iceberg order you consider relevant? I don't have a threshold. It depends on the context. Someday when volume is light, a smaller number can move the market, and other days like today, a larger number can move the market. So at any time, 2,785 is significant. That is a large iceberg order. I would say in general anything over 500 is certainly significant, but I don't have any set threshold. I think it depends again on the context, on the day, and the volume. All right, so that is the S&P 500, and so far I don't see any reason at all to go long. All right, let's take a look at NASDAQ, and then I do want to point out a couple of stock setups this morning that were based on a call gamma unwind, and that's what I look at for stocks every Friday. All right, so let's take a look at the NASDAQ now. Again, short setups was what was working. Pretty similar chart to the S&P 500. One thing to note is the falling yellow line, and you can look at the numbers here. that sell stop orders were helping to fuel this move lower all the way down. That's shown by the falling yellow line in the subchart. And these red dots, these are sell stop orders, and these are pretty big numbers for NASDAQ. And that is most likely because I am zoomed way out. All right, let's take a look at HERO and let's see what options traders were doing for NASDAQ. Let's go back to HERO. And we're going to take a look at the NASDAQ total signal. And just to point out, this is combining, it will combine, let's go take a look at the chart. So we'll take a look at NASDAQ. And this is clearly bearish throughout the day, clearly trending down. And this is combining NDX and QQQ into one, again, combined signal. And you can just see the numbers there. And QQQ is NDX is pretty small compared to QQQ, but it does have a contribution. So for S&P 500, I typically look at the combined signal, and the same for NASDAQ. So let's zoom in on this. Let's separate out puts and calls, and here's the same story, even more significant. Traders are buying puts, and that number is minus 936 million versus the call buyers at 2.39 million. So that's why the total line is just sloping straight down, and clearly put buyers are in control here. Let's go back and take a look at Bookmap. So I certainly played NASDAQ from the short side today. And there were plenty of opportunities for entries. Again, just looking for pullbacks. Shift in order flow from bullish to bearish. Just watch for the pink dots. There's the move lower at the 325 strike. And another head fake at the lower edge of the expected move as larger traders attempted to buy this with iceberg orders. Notice the rising light blue line, also rising CVD. That didn't last long. That turned out to be just another pullback for a short, giving you a good opportunity for a short as traders continued to buy NASDAQ puts. All right, let's take a look for just a moment at some stocks, and then we'll get back to the S&P 500 and NASDAQ. So I want to take a look at a couple stocks. First of all, let me set the stage for what I want to take a look at. And this is something that for those of you who subscribe to Spot Gamma may want to take a look at every Friday. So this is my watch list. And I have sorted this by next expiry gamma percent. And then I will look at the top gamma expiry. So this is showing, and I'm going to ignore VIX. And then I'm going to look at stocks that typically have greater than 30% gamma expiring or close to that. Now this is a weekly expiration. We'll take a look at this again next Friday for the monthly expiration. But we know that large cap tech stocks have been very strong this week. Traders have been buying calls, and those calls they're buying expire today. And when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And then as expiration approaches, those calls start to lose value due to time decay, and that is the charm effect, the change in delta with the change in time as time passes. And so those calls start to lose value, market makers' delta notional decreases, and they can sell their long stock hedges. And that is a great, pretty consistent setup. You just have to watch price action and also watch HIRO to confirm that if traders are aggressively buying calls today, then that won't work. But today it led to some good setups. And I'm going to highlight a few. So the first is NVIDIA. So we see that next gamma expiry is over 30%, and that is today. And then also there's some call domination above the 290 strike. So we know that traders are long calls. Market makers are short calls. They're long stock to hedge. These calls are expiring. So now let's take a look at HIRO, and we'll take a look at NVIDIA. So there's NVIDIA, bearish hedging flow. Note the put wall at 285 in play, and that's also the hedge wall. So let's go take a look at Bookmap now. Take a look at NVIDIA. So we know 282 is the put wall and the hedge wall, and that was the first target for a short this morning. NVIDIA was a great short, and you could have planned that in advance. Just you know that understanding that call gamma unwind that can happen every Friday, especially in a strong market where traders have been buying calls all week, and we know that those calls are expiring today, a good amount of them. So there's the setup in NVIDIA, nice short setup, and a well understood, well-defined strategy. All right, the next is Netflix. I don't have that on Bookmap here, so we'll just take a look at the HIRO chart for Netflix. So let's go back and we'll take a look at our watch list in Equity Hub for Netflix, and this is showing again over 30% gamma expiring today, 31.61%. Call domination above the let's see what strike that is, 345 strike. So let's take a look at HIRO and we'll see what Netflix is doing. So they're buying puts and selling calls. All right, thank you, JEC. JEC posted a Bookmap chart of Netflix showing a downtrend in Netflix. And HIRO is showing that traders are selling calls and buying puts. Definitely bearish hedging flow. And we have the kicker of those calls expiring, and market makers are selling their stock hedges. All right, so that's Netflix. And then let's take a look at the next stock on the list. AMD, that was not so much that, when I looked earlier, not so much of a setup. Not every stock works. And let's go back and take a look at Tesla. or continue on, take a look at Tesla. So Tesla, and here just below the 30% threshold, 26.85%. And also there was, I think some news this morning about Tesla that Elon Musk, had appointed a new CEO for Twitter. And I think initially pre-market that was taken as bullish. Traders were initially like that news. Let's go take a look at Tesla and Hero, and that did not last long. So note the levels that are in play for Tesla here. 175 call wall. Also notice this note about a, where was that? Oh, here. These are alerts in the Spot Gamma dashboard. There's the Tesla call wall breached at 7:01 a.m. So before the market opened, traders were buying Tesla shares, breached the call wall. Now let's go take a look at Bookmap. So here's the call wall breach at around 7 a.m. And the party didn't last long as options traders started fading that move, taking negative delta positions, and price moved lower again as those calls started to lose value and market makers could sell their stock hedges. And then price dropped below that 175 call wall and made it almost to the 167 liquidity, and now it looks like price is chopping around the 168 level. All right, so those are the those are the setups that I wanted to highlight, and let's go back and take a look at the index, S&P 500 and NASDAQ now. So the S&P 500 now may have found support at the 4100 level. Let's go take a look at Hero and see what options traders are doing. All right, so Hector asked, on stocks, what kind of options do you enter? Hector, I did not trade options today. I typically trade shares or futures. Now, if I had known that the S&P 500 or NASDAQ were going to drop this much, and I did not know that, I would have bought puts. And I'm more inclined to buy a put than buying a call. So because of the increase in implied volatility. But that's just me. I was trained as an options seller, a premium seller, and it's just hard for me to buy a call. So I was trading shares and futures today. All right, so RJ asked, Doug, you used yesterday's close for the lower expected move today, and is there a reason that you did that versus the open, or do you track both? And I just did it because I was I had time yesterday well, really didn't have time, but I just wanted to get it done. So I was as prepared as possible and for the morning. So there's certain things that I have to do in the morning. The information that Spot Gamma provides is based on a lot of it based on open interest, which is only available overnight. So I know the expected move was available at the close yesterday, so I just calculated that number, added it to my charts, and that was it. And I think I'm just going to continue to do that. And Hector asks, what scenarios you go for zero DTE? So again, I am, my reaction is to trade shares or futures. I'm just not in the frame of mind to trade options yet. I mean, that's something that I would like. I just, again, today would have been a good day to trade options, and I think JEC may be doing more of that. Maybe he's in the frame of mind. I mean, there are advantages of it to that of defined risk. You don't have to worry about a stop order. You just buy a put today and let it play out for the day, and you be willing to take a loss or an asymmetrical gain that you would gain today. So it's something that I'm working on. Again, if I'd known this move was going to be this large, I would have certainly bought a put today. I just didn't know. And especially today was starting today, market maker's position was positive. So in that case, I'm thinking more range day, lower volatility, and that's actually what Spot Gamma was calling for today. Let's go to the this is the Spot Gamma AM Founders Note. So they're saying today so for today we anticipate volatility to remain muted and price action look similar to that of the last several sessions. So yesterday I believe was a range day. So I'm not with that in mind, I'm not thinking buy I'm not thinking buy options. And so RJ says, so Spot Gamma was wrong. Yeah, I mean, everybody has their days. So maybe somebody had a better read on it than I did. But I was, again, using the numbers as my basis. I was not thinking this is more typical, this larger trading range, more typical of a negative gamma environment. But watching, I did trade from the short side today. I traded NASDAQ from the short side today and had a good day. I just did not trade zero DTE options. That's just typically not my frame of mind. And keep in mind that generally buying an option is a low probability trade. You have less than 50% chance of making money. And I don't know if there was any tell that today was a trend day. Going to be a trend down like this. Maybe it was the reaction to the consumer sentiment. I don't know. And I also managed some long-term trades today. I bought back some short calls. So overall, good day today. Again, I traded NASDAQ from the short side, and then bought back short calls in the S&P 500. All right, let's take one last look at the indices, then we'll call it a day. So first of all, here's the S&P 500. Let's zoom in on. So far, according to the options market, really no reason to go long. All right, so Uncle asked, if you zoom in on Bookmap, they flipped the book around 225. All right, so let's go take a look at Bookmap. So this may be what Uncle is talking about. And typically I don't look this close. So I'm looking more at levels and price action. And this may be something that Bruce has much more expertise on than me. I'm looking at and talking about a much larger time frame than zooming in on action like that. So that's something for Bruce. So it looks like well, traders were trying to get long, immediately greeted by sellers. So I see no reason to get long here, and I had a good day from the short side. And RJ comments on IV has not expanded that much. Let's just take a look at VIX. See if I can find my VIX chart. So it looks like VIX is up just 0.67, maybe just a little bit less than 4%. We'll zoom in on today. So JEC comments on VIX one day. Let's take a look at that. And I would expect much more. All right, so that makes a lot more sense. So, of course, the VIX is primarily looking at 30-day options, looking at options 30 days out. And we know that the bulk of the volume I mentioned earlier in SPX puts and calls was today, the 12 May. And note this is up, and this is I'm sure you can't read this, but this VIX one day is up about over 13% today. So Brent at Spot Gamma has talked about this for some time, that traders are focused in the short term. They're focused on zero DTE. They're putting off any concerns about debt ceiling or anything else that may be coming out, and that's tomorrow. That doesn't matter. They're trading today, and what they're trading today is reflected in this VIX one day. So for day trading, this really does make more sense. So when you look at it in this terms, yes, there is a pretty significant expansion in volatility for the day. Thank you, JEC, for pointing that out. All right, let's take a look at NASDAQ. So S&P 500, order flow still bearish. Iceberg stops, CVD all bearish. Price chopping around this potential support levels. All right, let's take a look at NASDAQ. So it looks like larger traders are trying to get long with iceberg orders, but the sell stop orders are still dominating, shown by the falling yellow line as well as the numbers over here. These are cumulative numbers for the session. All right, let me take a final look at questions. So YouTube has been quiet today. Great discussion in Discord today. I want to thank you. Thanks to Hector, RJ, JEC, Uncle. Thank you for your chat here. And JEC, I agree. From an options perspective, vol is your most important indicator. So we can confirm that. Let's go to NASDAQ now. Go to NASDAQ, look at HERO, and we see that traders continue to buy puts, far dominating call buyers. So 1.03 billion negative versus 19.1 million. Put buyers are definitely winning today, and let's see what they're doing. Whoops. Go to the total signal, add in next expiration, zoom this out. So it is some next expiration, but it's also the total signal really dominating. This is all expirations. Turn that off. And JEC, again, glad you're here. It's your commentary really adds a lot to the presentation. All right, folks, I need to wrap it up. Great discussion again in Discord. Uncle, RJ, JEC, Hector, thanks again. And I'm going to go ahead and wrap it up. I see no reason to go long. Now it's been a great day from the short side. Everyone, thanks again for your comments, questions, and comments. Thanks for watching, and I will see you next week. Have a great weekend, everyone. Bye.